The startup ecosystem in Pakistan attracted a lot of venture capital in 2021 and the first half of 2022. Unfortunately, since Q2, deals and funding have declined. VCs are back to doing due diligence and shaking hands. So, given the current economic environment, what can startups do to gain an advantage when it comes to fundraising? And more importantly, what should startups understand before seeking VC funding? Zishan Gondal joins me in this episode of the Misal podcast to answer those questions. He is an investor and head of strategy at Zan Capital, an early stage VC firm with $65 million in assets under management. Let's listen in. Welcome to the Misal podcast, Zishan. How are you?
I'm great. Great to be here, Zad.
I was doing some research on you, of course, but unlike Faisal, who is all over the place, all over social media, you have maintained a very low profile. So I would love to learn more about you. So if you could get started if you could just introduce yourself, how you ended up working at Zan, and what exactly do you do at Zan Capital?
Yeah, happy to do it. So just a little bit of background. I have a lot of family in Pakistan, in Punjab particularly, in a small city called Mandi Bahauddin. And my immediate family, so my parents and my siblings are all in the New York area. And so I grew up mostly in New York, in Brooklyn, and would visit Pakistan every 2-3 years, sort of in the summers. In the last 4 or 5 years, I started visiting sort of on an annual basis, and I started seeing certain changes in Pakistan. A lot of them were for the better, in the sense that for the first time, our ancestral village finally got internet, maybe 5-6 years ago. For the first time, a lot of people that I knew started getting smartphones for the very first time, and started to use YouTube and WhatsApp and Facebook and these kinds of things. And in many ways, a lot of the changes of digital transformation that we saw in other emerging markets started to play out in Pakistan. And we always hear about the demographic sort of advantage that Pakistan has, and in many ways that advantage is a bit overblown, and some of those statistics are empty statistics, we could say, but there's something to be said about internet connectivity in particular. And in my mind, there would be a certain point where Pakistan was viable as a venture ecosystem or a startup ecosystem, or so I hoped, right? Obviously not every ecosystem that has the ingredients ends up becoming a viable startup and venture ecosystem. And in my mind, that time was actually a bit further away than it ended up being. And if I were to predict back in 2019, I would have said maybe 5 years from now, right? Maybe in 2024. And it was something that I wasn't set on working in the ecosystem, but it was something that I was deeply interested in. And in terms of the opportunity at Zane Capital, I joined Zane basically at the time of its founding, and at that time it was essentially the two Faisals, so Faisal Aftab and Faisal Chaudhry. At that time, things were just getting started. In many ways, we were still choosing a direction for the firm. And I initially joined thinking that it was going to be something that I did for just the summer. And because I was wrapping up a role at Yale University, and I was about to start my MBA at Harvard Business School, and I had the summer off. And so my friend Rabi Malik, who is well known in the startup ecosystem in Pakistan, reached out to me and said, "Hey, I know a couple of guys are starting a firm called Zane Capital. I'm sure they could use your help. Why don't you help them out and just help them get set up? Since you have the summer off and you're interested in the ecosystem." And that's essentially what I did. So last summer I was with them, thinking about a lot of the firm's strategy, sort of the direction that the firm would go in, different areas we would invest in. And in my mind, I was blown away because I felt like the ecosystem was much further along than I had thought it would be at that point in time. And part of that, there were different reasons for that. Part of that was a COVID boost. Part of that was a lot of people coming back to Pakistan, after having gotten experience abroad, mostly in Dubai, in companies like Careem, in companies like Swivel. Part of that was, different network effects of international investors having extra capital and wanting to deploy that in Pakistan. But it felt a lot more viable than I thought it would be. And essentially what happened is, I had a really great experience that summer and got to do a lot of really impactful work, and the firm asked me to come back full time, even when I was doing my MBA. And I thought about it for quite a bit because I'd never worked in Pakistan before. This is my first time working in Pakistan, and I basically thought about if I can manage it while being at Harvard Business School, then I should do that, because this was something that I could see myself doing, for the years to come, after business school and beyond. And that's essentially what I've been doing. So I've been with the firm since its founding, and plan to continue with the firm moving forward as well.
Do you split your time between the US and Pakistan, or how does that work out?
Yeah, so nowadays I visit Pakistan about twice a year, usually in the winters and the summers. I'm planning on shifting to Pakistan full time around next summer, and then I'll be on the ground, the vast majority of the time, except for travel to Middle East and US occasionally. Lately,
I've seen Zen venturing out a little bit more from Pakistan to looking at other Middle Eastern countries. So can you talk a little bit about the thesis, or the average check size? What sectors is Zen, basically looking at when it comes to investing? Yeah, I would say we've done a few opportunistic deals outside of Pakistan, but our core focus and the vast majority of our portfolio is Pakistan focused. If you look at our portfolio, I would say 20 plus portfolio companies are Pakistan companies, and across vertical. So we don't have any strong push for only sort of a single vertical or a very narrow investment thesis. I think our investment thesis is that Pakistan is on the cusp of a digital transformation, and in many, many sectors, areas that were previously not digitized or not transparent in that way will come online, and it's going to open up new forms of business, and it's going to change other forms of business. And so, the economy will adapt and the business environment will adapt. And that's why we've invested in across many, many verticals, from agri-tech to B2B, commerce, to logistics, to travel and others. And our thesis is essentially get in early, pre-seed to seed is where we've done most of our deals, and then continue to double down on the companies that are performing really, really well. And really, we're at the early stages where we're backing founders, right? A lot of times it's pre-product. A lot of times it's when it's just the founders, they haven't built out a team yet. And a lot of what we do is trying to help founders go from idea and from the previous experience they have into actualizing the product that they're building, and helping them think through strategy and helping them think through hiring and the business environment and everything else that goes along with running a startup. So, of course, right now we are facing certain issues with the economy, especially in Pakistan. Plus, overall, the stock market is not doing that great. Tech stocks are down, valuations are low, etc., etc. So, because of all that is happening, have you seen the deal flow slow down, or are you still, getting as many pitches as you were before? Yeah, I would say deal flow has slowed, but it's still healthy. The one thing that has changed quite a bit is the appetite of international investors in the Pakistan ecosystem. And there's a few reasons for that, but overall, the investor appetite for international VCs to invest in Pakistan has gone down considerably. One of those reasons is we're away from the period of easy money of 2021, where VCs had lots of money to deploy and extreme competition in the US. And so, a lot of them started looking at new emerging markets for the first time, and not just Pakistan, but other emerging markets did quite well in terms of relative performance of fundraising. India hit an all-time high of 30 billion plus last year in terms of venture funding. A lot of other ecosystems, Indonesia, Brazil, and others did quite well as well. And so Pakistan was a beneficiary of that, in that a lot of international VC money that was previously allocated to the US and Europe, they took opportunistic sort of bets on the Pakistan ecosystem and invested in a whole host of companies. But again, as the domestic ecosystem in the US experienced a slowdown, then
a lot of investors sort of decreased their risk tolerance. And obviously Pakistan, given its economic condition and its currency depreciation and others, is quite a risky investment from their perspective and from the perspective of their investors, their limited partners. And so a lot of them have cut back on investing in Pakistan.
If a startup is trying to raise VC money right now, what is something that you feel like they should understand before trying to raise?
The market in September 2022 is not the market in September 2021. And a lot of people are benchmarking as if, oh, I heard that this company raised this much with this product or this lack of product, so therefore I should be able to do the same because I have the same experiences as they do, or I have, a better team than they did at that time. And in the venture ecosystem, things change really, really fast. This is not just a Pakistan thing. This is also in the Bay. And in the Bay Area, I know many, many startups who, again, if they were raising in January of this year, raising would have been a piece of cake. They probably could have raised without even going through formal due diligence with some of their investors, maybe check within a week. But now things have changed, and now there's a lot more sort of stringency in terms of investment requirements, and the balance of power has shifted more in the side of the investor once again. Whereas in the last year and a half during COVID, the balance of power certainly shifted much more towards the founder, which is not necessarily a bad thing. But that's just the reality of where we are today, where the investor again has the majority of sort of decision making in terms of doing things on their pace and in their way. And I think a lot of founders still aren't fully aware of how that environment has changed. And so we've started to see it where funding rounds are going to be a bit harder, especially in the later stages, especially after the fall of Airlift in that sense as well. So I think later stage deals in Pakistan are always going to be more difficult because finding growth capital in emerging markets is challenging, and that's especially the case now. At the early stage, we still are seeing pretty healthy deal flow, and I've been glad to see that we're still seeing several pre-seed deals being funded. We're still seeing solid fundraising numbers overall, but the market today is not what it was 12 months ago.
If there is a startup that is trying to raise money right now, like, is there something that you feel like they don't understand, like when it comes to maybe like fundraising? This doesn't have to do with like maybe the market economics, but like just the idea, maybe the presentation, maybe the way they approach a problem. Is there something that you see in startups? There's something that is recurring every startup, and you feel like maybe someone would help these guys out, like figure this part out?
Yeah, I think what would be really helpful for the ecosystem in Pakistan, and honestly it's something that I could probably do, is explaining in a little bit more detail what makes a good venture investment in the eyes of an investor. And I'll give credit also to Mubaraz on this, because he's done a lot of very informative Twitter threads on thinking about the perspective of the VC. What is a VC? Who are they getting money from? What are their sort of goals in terms of investment? What is their mandate? Because a lot of people in Pakistan think that VC investment is for any type of business. And I have a business that I want to scale. It's doing pretty well. It's profitable. And, I own a fast food restaurant and I want to create 5 more. Therefore, I should get VC funding. That's probably a great business. A lot of services businesses are great businesses, but that's not a VC business, right? And so just explaining why that's the case, right? Given that VCs are looking for tech-enabled businesses, they're looking for businesses that can scale and generally are asset light. Those kind of asset heavy businesses where there's a lot of operational costs involved. There's a lot of, you have to rent real estate and you have to actually, build physical infrastructure. Those are usually not the best VC businesses, but they might be great businesses in general. And explaining that distinction, I think, is really helpful for people because, unfortunately, a lot of people come to us saying that I have a business idea, can we fund it? And there is a world in which that idea would be funded in more developed countries like the US. And often that could come from private equity investors or other types of investors. But Pakistan's capital markets are not nearly as developed. And so unfortunately, those people, while they have great business ideas, there's not really a way for them to get funding for it. and venture capital is also not the right funding mechanism for it either.
The lack of understanding about what a VC business could be, a VC funded startup is, and why a VC would fund a startup. So I'm trying my best to, work on that in terms of content, to create content around that so that, we can educate, we can inform, and maybe hopefully, prepare more startup founders to pitch properly.
Yeah, absolutely. And on that point, I think it's great what Techstars is doing on that front. Previously, Meet and Bytes was also doing some of that, but that's sort of taken a back seat. And we need more, right? It's not just any one sort of publication's responsibility. And, I think Mubarez is doing a great job of educating the market. Rabi has his newsletter, Notes on Pakistan, which I would highly recommend. And I think, the more we have on the content side, the more people are aware, because I can't blame someone who comes and wants venture funding for, their services business, because how are they supposed to know what venture funding is appropriate for or not, given the venture ecosystem is so new in Pakistan? And so I think the impetus is on the people in the ecosystem to give a little bit more clarity on where we're coming from and explain a little bit more what is venture and what are we looking for, right? I don't think the onus is solely on the founder trying to raise money. And part of it is there's a lot of great resources already out there, right? There's great resources on what is a startup, what is sort of the mindset of a startup founder, what is the mindset of a startup investor, what is equity, how does it work, right? Because for many people who are employees at startups in Pakistan, this is the first time that they're ever dealing with equity. So again, how are they supposed to know? And I think part of that's something that I want to spend some time on in the coming year is, if I have a certain vantage point into the ecosystem, then I should share some of the learnings that we've had and some of the thought process that we've had, because the ecosystem is pretty small. And so if it's useful for, an aspiring founder that, hey, this is what a seed stage startup is, and here's how it's different from a Series B startup, or, here's what a CTO looks like, which is different from what an engineering leader is like. And these are things that I think we often take for granted, if we have work experience in New York or the Bay Area. But again, this is a new ecosystem, and we shouldn't expect people to know these things, right? This is probably the first time they're hearing of it.
Yeah, so I have made that mistake a lot of time where I'm just assuming things, and because it's so commonplace, these commonplace things, right? ESOPs and RSUs and ISOs and all those things, so common here. It's when you're talking to someone in Pakistan, it's a completely different thing for them. It's what the hell is equity? Why am I getting paid so less? And you're telling me I'll be owning a company. It's I don't want to own a company. I want a bigger paycheck. And it's okay, well, this is how it works. You get maybe not that crazy of a paycheck, but you do get a lot of equity if you're an early employee, and that's how you build your equity. And if startup does well, everyone wins. So that's something that it's going to take some time. So since you mentioned that, let me ask you this: is the way we approach ESOPs and stock options and all that, is it exactly the same as the way US does it, or are there some nuances?
Yeah, I think there are some differences, and a lot of that has to do with the cultural mentality of people in Pakistan. And it's not good or bad; it's just what is the case. I don't think there's anything wrong with that. And honestly, I think sometimes it is a little bit naive to think we can just ship Silicon Valley or New York sort of mindsets and import them into Pakistan. This is not how any other venture ecosystem in the world is developed, right? The Indian ecosystem has certain nuances based on Indian culture, which is far more similar to Pakistani culture in that sense. Chinese ecosystem is unique. The Brazilian ecosystem is unique, as is the Indonesian one. And the Pakistan one also has some sort of unique factors as well. I think one of the things in Pakistan in particular is people are far more interested in increasing their cash compensation versus equity. And this is by and large the case. Often what you have is sort of the senior executives of a startup, they've basically made the decision that, if the startup does well, then I want to put my eggs into this basket, and I'm willing to take a pay cut and take higher equity compensation. But the mid-level manager or the entry-level employee is often banking more on job security and on a steady paycheck. And so they'd be willing to give up some shares for additional cash, even though on paper the value of those shares is is pretty significant if the company continues to raise. But that's the thing, right? Shares are always on paper. And so in a place like Pakistan, people don't want wealth on paper. They want wealth in their bank account. And even that is, not always a fair estimation of their true wealth because of currency depreciation, right? Just, in the last couple of months, when I first came to Pakistan, this summer for this trip in July, the rupee was 208. And when I was there last summer, it was, 157. So someone who's just sitting on rupees, which again is the vast majority of people, right? Where are you going to invest your money if you have savings? They lost, a good 30% of their net worth through no fault of their own. And, just in that course of those 7 weeks, the PKR went from 208 to 240, and now it's sort of in the 220 range. And so people in Pakistan are extremely sensitive to, the safety of their investment, and startup investing is a risky business, and equity is a risky proposition. So obviously for founders and for senior executives, they know what the risk is. They fully understand what they're getting into, or I hope they do, and they're willing to take on that risk. But for a lot of other employees in the organization, they're banking on making a steady paycheck so that they can pay their bills and they can save up, and they know how much their worth is, or in terms of like the money that they're getting from the company.
So one thing that you mentioned about the currency depreciation. So my question about that is, I've always wondered this, that, startups are raising money in US dollars, right? So they're like, $2, $3, $4, $5 million raised. And of course, they're being evaluated also in US dollars. But when they earn revenue, they're earning in rupees, right? So if they're earning in rupees and rupee keeps depreciating during your due diligence, do you look at what the currency fluctuation should be for you to basically 2 or 3x return on investment once the startup exits? Like, is there some sort of analysis done on that part?
Yes, absolutely. I think the most important sort of benchmark for valuation is always going to be dollarized. People want to know their dollarized rate of return. And often startup founders in Pakistan will show GMV growth in PKR. And internally, we always convert that to dollars because, PKR revenue growth that is going up and to the right, it might be, flat or heading sort of in a negative trajectory once you convert that into PKR. And again, a lot of it is just the macroeconomic factors of Pakistan. And this is actually one of the reasons why valuations have come down from last year, and why investor appetite from international VCs has gone down, because their LPs, their limited partners who are giving them money to invest in startups, are reporting returns in dollars. And so even if your PKR returns are great, if I had 30% PKR returns last year, my dollar returns would still be negative. And at the end of the day, if I am a limited partner, if I am an investor into a venture fund, and I have pension obligations that I have to pay, for firefighters or teachers, or I have a family office that who's and the client is hoping for a certain type of return, then negative dollarized returns aren't going to work. And so that's why I think there's an extra onus on Pakistani startups to do well, not just in PKR terms, but in dollar terms, because the international business community operates in dollars. And, that's why until we have sort of stable foreign exchange, it will be more difficult for Pakistani startups to do well in that dollarized phase. And honestly, what will happen with a lot of startups is they will either try to get sort of safer forms of revenue by expanding outside of Pakistan as well. So you start in Pakistan, you build a product, and there's a lot of advantages to building in Pakistan in terms of cost, in terms of scalability. And once you've proven the model in Pakistan, then you can go to Saudi Arabia, or you can go to Dubai, or you can go to Egypt, or you can go to Bangladesh and other places. And a lot of those places have much more stable sort of foreign exchange. And so it becomes easier in that sense to get those dollarized returns for your investors.
Since we are talking about due diligence, what is the process like at Zen Capital? Like, are you doing due diligence for like a couple of weeks, couple of months? And what's the process like?
Yeah, the timeline can vary. It more so depends on the stage of the deal and the complexity of the deal. Usually in early stage, due diligence is a lot quicker and there's a lot less of it to do. Because in early stage, there's usually no real financial model. And this is a big difference between sort of what we'd say standard private equity. And I'll even sort of clarify that, because I think private equity is also a concept that people in Pakistan are not as familiar with. So, and sometimes venture capital is sort of considered part of private equity, meaning private equity being anything that's not in the public markets. But in my mind, I would say, venture is one core part of it. It's sort of on the earlier stage, pre-IPO, and traditional private equity, what we'd call leverage buyouts in the US, is much later stage and often much larger in size. And so in traditional private equity, you do a lot more due diligence because you have years and years of financial statements. You have forward-looking projections, you have historical data. There's a lot more financial sort of modeling that you would have to do, a lot of sensitivity analyses. And in early stage venture, a lot of that doesn't exist because you have projections, but there's no real basis on which to create a financial model, through 2027, given how little we know about what the Pakistan economy will look like in 2023. And so obviously you should have a view on it. It's good to have that model and to go through the exercise. But it's not the primary factor on which we're looking to invest or not, right? It's not that the DCF, the discounted cash flows of this company are attractive, and so that's the only reason we did it. At the early stages, it's a lot more due diligence on the founders themselves, looking at their past experiences, talking to people who have worked with them. Are these people that you enjoyed working with? What are their strengths? What are their weaknesses? How are they as a team? Is this the first time they're working together? So those founder dynamics are really, really important because if the founders are aligned with one another and they're well positioned to build, they'll find a way to make it work. But if the founders are, already have sort of some communication gaps between them, or they're not fully aligned, with their investors or with other people sort of in management, then that's a red flag for us. And the due diligence process, I think in early stage, it could be, as short as 1 to 2 weeks. But sometimes for a more complex deal or for a vertical that we haven't previously invested in, we'll spend a little bit more time and really try to go deep and try to understand it. Because a lot of times with verticals, there are parallels in other markets, right? Maybe there's a US startup or an Indian startup or a Chinese startup that's done something similar. But again, there's going to be local nuances that you're not going to be able to find online. You'll just have to talk to people in that industry, right? Because Pakistan has its own regulatory environment, especially on the fintech side. It has its own sort of ways of doing business, and so it's important not just to say that, hey, this worked in China, therefore it will work in Pakistan. China is a very different economy and scale than Pakistan is, and so if we feel that it will work in Pakistan, we would be happy to invest in it, but we have to make sure of that first.
So let me ask you this: what exactly do you see in the market right now where you wish someone was solving a problem that you don't see anyone solving? Like, is there something specific that you can talk about where you're like, why isn't anyone building this? It worked in XYZ market, maybe it might work in Pakistan.
Yeah, I would say there's a couple of areas that we've been particularly focused on in the last year, not because it's our mandate necessarily. We have a broad mandate. We can invest sort of across sectors, but these are just areas that we think are very ripe for innovation. And in particular, I'm interested in fintech. And I think one of the great things about startups is they are not tied to doing business the way that traditional businesses have always operated. And in many ways, that is a very liberating thing in Pakistan. You don't have to, just a lot of times you'll hear from people in the industry that, oh, well, we've always done it this way. But I think one of the point of a startup is you have the luxury, the privilege of trying to do things a different way and to disrupt, right? To innovate. And again, that doesn't mean necessarily going against the banks. In many ways, banks are the natural partners of fintechs, right? They can complement one another, and fintechs can take on the areas that maybe the banks find too risky or not as appealing. And I would say, what I want to see more in Pakistan is platforms, fintech and otherwise, that are solving issues for the everyday Pakistani. And, I understand why it's the case, but I don't agree with this idea of we're only going to create products for sort of the elite of society, the wealthiest people of society. In many ways, they do have more purchasing power, but they're smaller in number, and the ability to scale a product then becomes very limited because yes, in your pilot or your first 6 months, you showed really great growth because you were sort of operating within that, what we would say, the serviceable addressable market, the SAM, of a wealthy population that's looking for a certain need, and you're fulfilling that. But the TAM, the total addressable market, is not much larger than that small elite class. And so unless you're building for the small but growing middle class, or people who 2, 3, 4, 5 years from now will have that purchasing power, I think you'll quickly hit a wall in terms of how much you could continue to grow in Pakistan. And that's, in my mind, one of the point of startups is to make life easier for the everyday person. And we see this in many ways, right? So on the fintech side, mobile banking has taken huge leaps, the last few years, both on the incumbent side and on the fintech startup side. And that's the point of apps like NeaPay and Sada Pay is, you've had significant difficulty in operating in the conventional system. Let's make this a little easier for you. Let's make this, less of a chore and a burden, and more of, something that is not occupying that is not a source of stress for you. And I think that's really powerful. And the fact that, startups can also create job opportunities, and they can also create mechanisms for people to want to stay in Pakistan, rather than, you are alums or an IBA grad and immediately you're thinking about how can I make it to Dubai or do a master's in the US. And again, I don't blame you for that, right? Because at the end of the day, like, what are those training grounds in Pakistan where you're a graduate from a reputable university, and you want to stay in the country? What are your options, really, right? In the past, it's mostly been MNCs, so multinational corporations like Unilever and Engro, which is mostly Pakistan focused, Coca-Cola and others, and those are great training grounds in many ways, but they're very different than what we would say in the U.S. is, you have a lot of people will be training at Morgan Stanley and Goldman Sachs and McKinsey and Google and Facebook and these kind of companies. And the amount of learning you'll have at those companies is extremely rapid. And so, many people, for decades have basically gone to these companies to learn as much as they can, as quickly as they can, and then they'll go off and do new things. And I think startups in many ways represent that in Pakistan as well. And, I'm glad to see that for a lot of university grads, not just from the alums and IBAs, but also from other universities, they see startups as a very viable option for them after graduation. And in many ways, it's their preferred option, right? They don't want to go to an MNC and they don't want to go abroad. They want to stay in Pakistan and build something.
So one question that we touched on this a little bit earlier, where we talked about, it's getting difficult for startups at later stage to raise funding. I want to talk more about okay, so Series A, Series B, Series C, eventually you got to exit, right? Look, so where exactly do you feel the exit opportunities are going to come from? Because it's not going to be on the Pakistan Stock Exchange, right?
Yeah, this is a great question. And honestly, again, it goes back to the root of what is a VC looking for. At the end of the day, a VC is looking for outsized returns to provide to their limited partners, to their investors. And this is why growth is important for any startup, definitely, but path to profitability and a path to exit is even more important. And that's more so the case in any market like Pakistan than it is in the US. In the US, the capital markets are sufficiently developed and there's sufficient investor appetite that you can continue to burn cash for several years and keep raising more and more cash. And profitability does not have to be something that you worry about, in the first few years of your business necessarily. But we don't have that luxury in Pakistan. And I think we start to see it where, you can't be like an Uber and burn cash for 10 years and raise billions and billions of dollars. And then, now in 2022, be like, okay, we're going to try to turn a profit now. So we're going to sell our, business divisions that aren't going to make money. We're going to sell our moonshot projects, right? We're not going to build driverless cars anymore. And that's because the public markets in the US, investors are telling Uber either turn a profit or we'll sell, right? We're not interested in funding your ambitious R&D projects anymore. And I think in Pakistan, people who think that, if we just follow the Silicon Valley model, then it will work. The big difference here is we don't have capital markets that are as deep as the U.S. And so when you're raising, tens of millions of dollars or even hundreds of millions of dollars, the question then becomes, well, who is going to have the investor appetite to fund that? Because a local VC probably can't go, much more than Series A at this stage, or, is not going to write a $10 million check or more. And so if you're trying to raise, a $50 million round or a $100 million round, well, that money has to come from somewhere. And I think the idea in Pakistan that we can just keep growing, and as long as we're growing, we'll continue to be funded, that is not going to be the case. Like, growth is fantastic, but profitability is, or a path to profitability is I think far more important.
Yeah, as far as Uber goes, I think it's still like half the price it was at IPO. I haven't sold my RSUs, so I'm still holding on to them, see where it goes. But the only way Uber goes above the IPO price is if it has an Indian CEO, because there is no other way. There is no other way. It's going anywhere near IPO price, and it definitely
maybe Elon Musk decides he wants to take over Uber, and then the investors are left holding their breath whether he goes through with the purchase or not.
Exactly. Yeah. I mean, so I personally have always felt like Uber could have been if there's another, company or tech company that would acquire Uber, I think that would make a lot more business sense. But I can see a lot of company Uber can purchase, but I just don't see what exactly would be a ideal match for Uber in terms of like acquisition. But I see a lot of companies in travel space and other mobility space that we can acquire, of course. But anyways, so one last question before I let you go. What is the best way to pitch you? Is it just submitting the contact form on Zen Capital website, or is there another way to pitch you?
Yeah, that's the best way, in the sense that we read all the emails that come through to us. And we don't respond to everyone, but we aspire to respond to everyone, I should say. I think usually if there's sufficient interest, we will try to respond quickly and get an initial meeting set up. And we try to be as transparent as possible. If something's outside of our our investment interests, then we will tell you immediately. And we will say that, hey, this country is not a country we're looking at. This vertical is not a vertical we're looking at, because our job is to make this process, raising capital is not easy, and it's often a painful process. So we try to reduce that burden on founders a little bit and just be upfront, right? If we can invest in something, then we want to let you know as soon as possible. And if we can't, which is more often the case, then we want to let you know as soon as possible. I think the other way is, and it's always good to do this, is to have a warm introduction if you can, in the sense that often when you get emails, it's easy for those emails to just become another one of the pile. But often, if you're introduced via a mutual contact, or you meet in person at one of the sort of startup events, and Catalyst Lab does great events in Pakistan, which are great for people in the ecosystem to meet one another, then I think that's something that's a little bit more memorable in the mind of the investor. And again, when you're seeing dozens of pitches every week or month, then being memorable is important. But there's no real sort of secret to getting a meeting. If you have the right experience and an interesting idea, then we probably will set up a meeting. I think the other thing is realizing that the meeting is just the first part. And again, venture capital firms need to be very selective in what they invest in, because at the end of the day, there's hundreds of potential investment opportunities even in Pakistan, and we're going to invest in a very small percentage of the ones we see. And so I know that every founder obviously should believe that their idea is the one. And we would love to continue to invest in founders, sort of pushing the envelope across verticals. And this is one of the reasons that our portfolio is very it sort of goes across the sectors in Pakistan, because anywhere we see a viable business opportunity, we're happy to invest in. But with that being said, we are also pretty selective in our investment, and we try to be very upfront with people who are pitching us that, hey, these are the reasons that we are able to invest or we're not able to invest, so that there's no feelings of, that you didn't get your fair shot in that sense.
Sounds good. So let's switch sides now. What if you had to pitch someone as a venture partner? What would you say? Where is the value add that comes by being part of a Zan Capital portfolio?
Yeah, I would say in many ways, the founders of our portfolio companies are some of our best advocates. And often what we will do is, we will have people who are pretty far along our investment process talk to founders we worked with, and they can choose the founder, right? We're not going to give them, one or two founders in particular and say, talk to these people, because why should we bias their thinking, right? They can look at our portfolio, it's online, and they can reach out to anyone if they, whoever they want to reach out to, we're happy to connect them. Because I think it's really important to know who your investor is, just as much as it's important for us to know about the founders we're working with. And, we are in the business of trust, right? This is a relationship business. And if you try to take advantage of a founder and give them unfair terms, then the market will know, right? The ecosystem will know, and it's a small ecosystem. And so for us, we try to be extremely careful in terms of being very professional in terms of maintaining the reputation of our firm. And, I hope that Zan Capital continues to have a great reputation in the market, because that's what we want to do. And so I would say that for any founder, you should ask around in the ecosystem. You should talk to people who have taken investment from us. You should talk to people who haven't, and you should get their thoughts, right? Because at the end of the day, how else are you going to know about the quality of investor? For us, we also try to do a lot of work with our founders in terms of helping them through think through product strategy, in terms of thinking through regulations and hiring. And I think this is something that is a bit unique in the sense that, especially on the fintech side, I would say, we have some really great experience on the fintech side that is not that common in Pakistan, right? So Faisal Chaudhry, who is one of the co-founders of Zain, spent 16 years working at Goldman Sachs. There's not that many people who have that kind of depth and breadth of experience in financial services. Faisal Aftab has incredible experience across a whole variety of industries. He's done consulting, he's run an investment firm, and bringing that experience to your founders is extremely valuable. One key example I'll give is Faisal Aftab has a great insight into sort of the global macroeconomy. And it's one of those things where, if you look at some of his posts and tweets, like late last year, he was giving the warning signs that, hey, once the Federal Reserve starts to raise rates, the funding ecosystem globally will change. And therefore, it's better to raise capital now and to conserve, to reduce your burn so you can preserve your runway. And if you look, a lot of the Zain portfolio companies did exactly that, right? Postex did that, and Postex recently just acquired Call Courier and became the largest player in their vertical, which is a phenomenal achievement for a startup in such a short amount of time. Taza did that, Truckit did that, and it's good because that means the health of those businesses, even this downturn, is still very sound because they have runway. And it's one of those things that given Faisal Aftab's macroeconomic expertise, he was able to advise them on that, before the market as a whole sort of caught on, and it shows in that now they're not as worried about trying to find ways to stay alive. They're still focusing on sustainable growth and a path to profitability.
Thank you so much for being on the Misal podcast. I appreciate your time. And I think this is like, you have, like I said initially, you have very low profiles, and I'm learning a lot more about you. So it was wonderful meeting you and learning more about yourself as well as Zan Capital.
Yeah. And I think that's something that will change over time, right? As the ecosystem develops, there'll be more content put out. There'll be, more interviews, more podcasts and things like that. And again, I'll give due credit where credit is due. I think TechShaw has been fighting the good fight for many, many years. So before Pakistan had, a booming startup ecosystem, you were out there and you were making sure that people knew who was getting funded and what was going on in the ecosystem. And I think we need more of it, right? I think TechShaw is a great platform, and we need other people to come in and play this role as well, because in a new ecosystem, like, everyone has their share. And there's a lot of work we have to do in terms of sharing our views on things, sharing what we've learned, so that the next batch of founders, they don't have to go and learn everything from scratch, right? They can sort of just pick up and get up to speed as soon as possible.
Right. Yeah. Maybe I should consider creating a pitch deck and start pitching investors and see if there is any interest so I can go full time. But until then, thank you so much for the kind words. And I'm trying my best, one-man show, of course, doing whatever I can. And hopefully it works out for the greater good of the ecosystem.
Yeah, definitely. Thank you so much for having me.
Thanks for listening to the Misal podcast. I hope you enjoyed the podcast and will thank me by writing a review or sharing it on social media. Make sure you follow and subscribe so you don't miss the next episode. Thanks again. See you soon.